Perfect. Yeah, it looks like we're live now. So I'll start off with a quick introduction on myself. So hey everyone, Devin here, one of the founders of Gamma Swap, responsible mostly for BD and growth. I used to work in crypto before this at Figment, and I've been working with the Gamma Swap Labs team for a couple of years now. So yeah, we're trying to do, I would say almost weekly live stream. Some of those are focused on the Gamma Swap Labs platform or the Gamma Swap protocol platform. And also some of those are focused on other DeFi protocols and DeFi protocols that we want to potentially collaborate with or find interesting. So today's our first one of that series. We're having Contango here. I think they do something really interesting with leverage looping. That's kind of like a perp, but you can have very interesting strategies. So yeah, I'll let Ultra Secret introduce himself and the protocol, but we're super excited to have them today.
All right, thank you. Hi there. I'm Ultra Secret. Been working before as a regular dev, mostly on finance, and that naturally led me to get into crypto. I met my co-founders working in a financial consulting, and we were building crypto-related things, but on CeFi. Um, and yeah, we wanted to build something new and trade, do the carry trade, and it didn't exist. The tools didn't exist in DeFi, so we decided to build them. Since then, we have pivoted a bit, but yeah, that's pretty much our story.
That's cool. Yeah, I think the stories are pretty similar between Contango and Gamma Swap because our CEO kind of built this. Yeah, he came from a traditional finance background. He started in crypto in like 2013, and then was a quant at UBS. Left in 2016 to trade his own strategies. They were actually kind of restricting his ability to trade back then in his own portfolio, which is crazy. They want him to disclose everything, but decided
Yeah.
to go on his own. And then DeFi Summer came around in 2020. He thought AMMs were really cool, but when the incentives went away, he realized the yields didn't make much sense. So wanted a way to short it, and there wasn't a way. So that's how GameStop Labs came about. I think there were also, kind of cool conclusions we came to after that, which is essentially, LPs are selling volatility, but no one can buy it from them. So might help price that volatility better, provide a better yield for LPs, allow leverage or hedging on any token, and kind of extends from there. And it sounds like something similar happened with Contango. So yeah, I wanted to do a demo today and walk through the platform and specific strategies. Would also love to learn a little bit, I guess, about that original vision specifically and how it's evolved over time.
Sure. Let me share. Let me see where is my screen. Yeah, here it is. So yeah, how we started is that we wanted to do the traditional carry trade in traditional finance. So going long on spot, short on a future, and basically have the I'm gonna air quote free risk interest out of that. But we realized that there were not any expirable futures in DeFi. Like everything was perps and it was all revolving around perps. And we were like, okay, we can do this in CeFi, but then it's always a problem because you have to integrate with different venues and the APIs, and then transferring money from one to another is not instant, so rebalancing is a problem. And also even trading atomically is not a thing. So we were like, it would be nice if we could do this on the blockchain. But yeah, nobody was offering this product. So we went into a hackathon. We built that POC, and since then, like VC's approach, and we kickstarted. We pivoted a bit, and in the end, we ended up building on top of fixed rate money markets. In at the time, a yield protocol was released the paper, and it was pretty cool. And we were like, okay, maybe we don't need to reinvent the wheel, and we can use them. And so that's how our V1 was built. And it was like not that different from V2 in the sense that we were already looping stuff. So we were like depositing some money in yield protocol at a fixed rate, and then borrowing at a fixed rate as well, swapping, and with a flash loan in between, we would build this lever position. So when we wanted to expand a bit, we were like, okay, actually the mechanism is the same, and we could be doing this on Aave or anybody else, and that's how V2 was born, as a more generic plug and play thing, which it was supposed to support yield protocol, but then yield protocol decided to close shop, so we ended up just being on the perp, if you want to call it like that, side of things. But the architecture is really flexible, and that has been really, really useful for us. So what we started with is this, what we call the trade screen, that we could rename this to like advanced and basic. But we started with this because, as I said, we were building financial tools before, and this is what we, this is our bread and butter, and it has been for many years now. So we were like, okay, yeah, this is probably what people want. And then we realized that we also had a set of users that they may not want to deal with the complexity, or they may feel intimidated by the whole thing of the trading interface. So we were like, okay, let's go and build something that is a bit more digested down, and that it doesn't show information that like a non-advanced trader wouldn't want to see. So we came here and build this interface. The thing that is really interesting is that there is no difference between, I don't know, this APX ETH on Morphoblood thingy here versus if I search here for APX ETH. It's the exact same thing. If I open a position here, like here, if I click max ROE 38%, it's gonna be the same as here. The max leverage is the same. If I open a position here, it's gonna show up here as an open position. Here I don't have any, but we'll see soon. I'm not gonna use this as a test one because it's mainnet, and mainnet is expensive to trade at. But I could go for, I don't know, our first and biggest instrument, which is the classic let's loop on stake ETH. Looping in this case means I'm going to I'm going to borrow some ETH to buy stake ETH. Then I will deposit this stake ETH into, let's say, for example, I don't know, Aave on Arbitrum, okay? And when I do that, then the stake ETH is going to go into Aave. I'm going to borrow the ETH from Aave, and all of that is going to happen in the same transaction. So if I were to put here my margin as 0.1 ETH, given that my leverage right now is at 13.25, that means that I'm going to end up with an exposure of 1.325 ETH worth of stake ETH, which is 1.13 because stake ETH is more expensive than ETH.
And this is one of the more popular strategies on Contango, right? This is a strategy I use. I think it's a strategy a lot of whales use.
It is. I mean, I have the link for our Dune dashboard in another browser profile, but we can quickly let it load. Okay. But it's definitely our biggest open interest right now. We have almost 100 million worth of stake ETH lent across different money markets and chains.
About 40%.
Right now, yeah, right now the second biggest is EtherFi ETH or ETH.
Okay. So it's a similar trade essentially, but you're also
very similar strategy. Correct.
Yeah.
Correct. Different trust assumptions, but like under the hood, all the strategies are the same. You deposit something into a money market of your choice. You borrow something from the same money market, of course, and you use it to buy what you just deposited. So how we do this is like we use flash loans, so we can effectively borrow first from a third-party provider. So we would borrow the ETH first, use it to buy as much WETH as the user is instructing us to. We complement that with the ETH you are depositing. And when I say ETH, is anything that is in quote currency. So when you see a currency pair like this one, the thing at the left is the base, the thing at the right is the quote.
Right.
And so we would buy the WETH, we put it into Aave or whatever, and then we borrow enough ETH to repay the flash loan, pops your uncle. A slightly different one is this one, which is not on ETH, but on stable coins. So this is stake USDE from Ethena against DAI, which again,
yeah, sorry to interrupt. So all three of these essentially top trades via Contango are going long the staking rate, right? You don't want any price
Correct.
exposure. You have your base asset that's the same price or relatively like the same delta as the quote currency, and you're just long the staking rate. So in the Lido ETH and the Wrapped ETH, that's the 3%, typical around staking rate from validators plus any extra points. And then in the staked USE example, it's long the rate to stake Athena USDE via Contango.
Correct. Yeah, that's what we call correlated assets. Right. So, because the price is not necessarily one-to-one, but they both follow the same underlying or they are related somehow.
Yeah, exactly.
Then, yeah, I have to go to like the 6th or 7th position to find the first non-correlated asset, which is ETH USDC. And this is actually taking a directional bet on the ETH price against the dollar.
Right.
So yeah, if we see that our stats, so I think they no, they are not there anymore. But like about 80% of our total volume or open interest, I can't remember, is on correlated assets. That's what people are mostly using Contango for nowadays, which I believe is a pity because I'm going to show you now one of the features that I think we are one of the few, is not the only ones that have. Let's say I want to go long on ETH against the dollar.
Ultra secret. Right? 1 second though. Just quick question. Why would someone want to go long the staking rate? Like why are so many people interested in this trade? You're essentially getting paid to go long the staking rate, or how does the
you're getting paid because, for example, here, if you were to go long on the staking rate on, in this case, is Morpho on base, you wouldn't only get 12% pretty much risk-free, and I say pretty much because nothing is risk-free in the world.
Yeah, you're being paid
nowadays,
essentially.
Yeah, you're getting paid to keep your exposure to ETH, right? So if you already have ETH and you are long ETH on the spot, then it's only natural that you wanna get as much return on that ETH as possible. And one of the lowest risk things that you can do is to say, okay, if I just go and buy WStake ETH, it's gonna give me whatever WStake ETH is giving, which is 3.1%. Now, if I were to go long on this market, for example, instead of like 3 point whatever, it's going to be 12, right? So it's about 4 times more. And on top of that, in this market in particular, I'm going to be getting an extra 25% on OP rewards from the Superfest campaign. So one thing you can do here to say, hey, I care about the rewards or not, because you may just want pure ETH return.
Right. So in that Morpho example, I'm being paid like the 12% in, like, let's say real yield, and then an extra 25% in OP rewards. So I'm being paid almost 40% to hold the position. And then, let's say I have 10x leverage and the staking rate's 3%. I can expect, the rate to go up like 30% a year, like my position.
Now your position is going to go 12% a year.
Oh, okay.
Actually,
Gotcha.
not even that, because this is return on equity. So this is something that I can show you better here because we have the option. So let's search for the same position. Morpho Blue. Okay, it's saying 99 point whatever here because I'm not a max leverage. So what this screen is computing, and that's why it says max ROE, it's assuming that you are using the max leverage available. You don't have to, it's just how we show it. So here we show the ROE. ROE means return over equity. So that means that if I start with one ETH, and assuming this rate doesn't change, which of course is not true because it's variable, but let's assume that this doesn't change, then at the end of the year, I'm going to have 1.12 ETH. Okay. Now the position itself, I will have to switch this so it shows me the APY of the position. Position itself is only going to grow by 0.95 because that's your rate on whatever you contribute plus the difference between these two guys.
Right.
But because you don't really, when you're looking at correlated assets, you don't really care about that. What you care about is like, if I start with one ETH, how much do I get after 1 year? And that ETH is your equity. So your return over that equity is going to be 12%. And of course, you're going to get 0.25 ETH worth of OP, again, assuming constant prices and constant yield and all of that.
Okay, so that return on equity, it's including all of the borrowing costs that you would incur through the year, and then the
Correct.
expected, just return, I guess, through the rate difference, based on your leverage.
Correct. This basically means that the bearing rate is what we get it from the API of Lido in this case, and it says that the price of stake ETH should go up by 3.1% in a year. And the borrowing rate, we get it from Morpho in this case, and Morpho says that I'm going to charge you 2.33% of whatever you borrow a year. Now, one cool thing that we do is, and this is different from any other perp or perp-like protocol, is that this 2.33%, you only pay it on the amount you borrow. So if your position is worth 10 ETH, but you only borrowed 5 because you are at like 2x leverage, then you only pay 2.33% over 5 ETH, which means that over the overall position is actually 1.16 or whatever. And that means that your ROE is going to be, in that regard, is going to be higher. But of course, because the position is, because you have less leverage, then you have less stake is working for you, then overall it would be probably the ROE is going to be lower.
Yeah.
The
two main risks here are essentially that the borrow rate for ETH based on your leverage could be higher than the staking rate. Let's say there's a lot of volatility or something, but usually that's probably not the case. And then the second risk is a liquidation price. But since these are correlated assets, it's probably safer to go a little bit more leverage than you would typically do on something like ETH USDC or something.
Yes, and this is where people have to really do their own research. For example, for Morpho, because they have different markets, we put some labels here. Like this is the liquidation LTV, but according to Morpho, this market in particular follows the exchange rate, which means that they are actually looking at what Lido says that one stake is worth, or one W stake is, which means that the only, or as far as I know, the only way that rate could go ever down is if Lido ever has a slashing event and they are actually losing money. Like a DPEG on the secondary market won't affect that price. That's why it's exchange rate now.
Interesting to know.
This one, if I remember correctly, actually follows it doesn't say, so I wouldn't know, but when in doubt, it's usually good to go and see what the money markets do. Like Aave, I know for a fact, and they proudly say that they also follow the exchange rate, but I don't know. Radiant, I believe they don't. I'm not sure. And so in a market, in a money market where they don't follow where they follow the actual market rate and not the exchange rate, then you could be liquidated if, I don't know, some whale decides to upload a lot of stake ETH and then they tank the price. And if the oracle reflects that, then you could be in trouble.
I don't think it's happened recently, but there has been some Lido pegs. Yeah.
There has been there has been how do you know, like flash crash, like something happens and maybe somebody gets liquidated. The same is true for the SUSDE DAI thingy. So we know for a fact that Maker is hard coding the USDE price 1-to-1 with DAI. So they are effectively following the exchange rate or the theoretical price. But of course, in this case, right now, everyone is positive. But if I were like 17x levered here, well, it's already negative, you see, because the borrow rate is higher than the lending rate. So if you had this position, maybe you open it when it was actually positive. If you leave this open long enough, then the increase in the notional size of your debt would be higher than the increase on the notional value of this stake USD, and you will be liquidated.
Right. Yeah, because the borrow rates could change on I guess this is morpho, and then the USE rate, like if the funding rates, lower a lot, that rate could also change. So
yeah,
I guess if you're on really high leverage, then it might be something to, be conscious of.
Exactly.
Okay.
Always monitor your positions. This is like, sometimes people see this screen and they assume that these are some kind of like managed vaults or something like that. They are not.
That's what I assumed.
This is supposition, and you have to take care of it. And if you don't, you may be liquidated. Like, it's the same as if you open a position in the underlying money market. You gotta take care of it.
Right. Makes sense. So yeah, before I interrupted you, we were talking about we finished on the correlated assets. So you were about to go to the non-correlated assets and why, you wished, I guess, more people would trade those pairs.
I think it would be convenient for people, because if you go to any even in a bear market, funding tends to be negative for going long. But in a bull market, it's extremely high. Like sometimes you're talking about like 30-50% annualized. The thing is, like, sometimes you don't realize it because they show the rates on a like 8 hours basis or 1 hours basis, and it looks super tiny. But if you annualize it, you're losing 30-50%. And if you are highly levered, right, that may mean that you are losing 1% or more a day in your capital, in your equity. So it is extremely expensive. So unless if you're scalping on that, like their UX and their pricing is the best. Now, if you wanna have a medium to long-term position, then I would strongly reconsider that. And the other thing that you can do here that you cannot do in a traditional per platform is, like, I could choose to say that I want to go long ETH, but we also have these categories that we call ETH correlated. So I could just search for all the ETH correlated, and then if I don't care which stablecoin I'm using as quote, I could search for all of them and say, I don't know, I want to be at 50% of whatever LTV of whatever money market allows for.
Right.
And this is already going to show me, and I'm going to go long, so I don't care about shorts. So this is already telling me on each network what is the best option I have with and without rewards. And it's going to tell me regardless of the asset. So here I can find opportunities where I am, like, a big difference with us as well is, like, we always talk in APY, not in funding. So negative is always bad, positive is always good. There is no mental gymnastics on that. So I don't know, like right now, depending on what you're, which chain you are looking to trade, and what are you actually looking for, or if you care about the rewards or not. So here, if I don't care about the rewards, I could actually go long on mainnet on this LRT from CatDAO and actually get paid 9% to go long. So I literally, they pay me to go long.
Right.
With Renzo ETH, I will accumulate points and also get paid to go long. And this is base, right? So cheap transactions, going long 2.5%, which for long-term stuff, it's, I believe, very sensible. It's still 50%, so I have a decent enough liquidation buffer. If I click here, the ticket is going to autofill. It's going to show me I have still, like, the price has to go down by like 20, almost 22% for me to be liquidated. And if I expand here again, I can see all the particulars of this trade. And another cool thing is, like, if I know how much more or less I'm going to be trading, let's say I'm a whale-ish and I wanna put like $100,000 worth of my capital. What we are going to do as soon as you give us that information, either here or here, we are gonna recompute all the rates, assuming that a deposit of 100,000, like assuming that a deposit of $100,000 times the leverage happens on the base asset, and that a debt of whatever is necessary less $100,000 is taken from the pool. And as you can see now, the rate is not 9 point something anymore, it's 8.7 because we had an impact on the rate. So we show you how the thing is going to look like afterwards. And the thing is, like, we always joke that if everybody were using Contango, then nobody would ever find themselves in the situation where they open a profitable position and then the market flips, because nobody will take the uninformed decision of trading if they knew they were going to move the market and make it not only unfavorable for everybody else, but also for themselves.
Right. So pricing that in so they know that before the trade. Yeah. That's something we try to do as well. I imagine, so it seems like on the RS ETH pool, that one moved the market. But I imagine there are a lot of, like markets, for example, that would be really difficult to move because, it's billions of dollars, sitting in these money markets, for example. I think even like I was looking at Aave WST on Ethereum. There's like, a few, like, so much liquidity in WST,
but in that
given
case,
the
it
bar
doesn't
rate.
matter.
Yeah.
What matters in that case is how much would you pay. Like the rate that matters there is the ETH one, because like you don't really. I mean, this 0.353% is nice, but you are here mostly for the rate of the intrinsic rate of stake ETH. The question is, and what we are trying to answer there is, like, right now ETH is really close to the optimal utilization. Right. So if we borrow a little bit more, then the interest rates are going parabolic.
Right.
So it's not too hard to move this, because I say not too hard. It says that I need to borrow almost 19 million worth of ETH to actually start going parabolic. But this is mainnet. Like, trades of $20 million are not strange by any means. But then on smaller markets is way easier. Even on stake ETH, it's really easy to flip the rates if you don't if you don't take this into account. So
it's definitely important if you're a whale or trading in large size to not only look at the Contango market,
but not really, because like a lot of times what happens is that some market is already above the utilization rate, and they are offering you like a 50% APY or whatever, and like you look at that and it's really enticing, but then it means that, like, maybe with just $5,000, because it's exponential, well, not exponential, but like, the curve is extremely steep.
Right.
Maybe $5,000 already moves the market to something that actually gives you 5%.
Yeah. So if you're, I guess, depending on the market, if you're above, if you're in like that exponential area of the curve, like above that utilization threshold, that's when it starts. That's when anyone could really move that market pretty easily.
Correct.
Yeah,
Correct. And
for
that's
sure.
why here as well, so you have the same here, like here we are saying some, like you can say, okay, I want to get at least 10% of ROE. And what this is saying is how much money can I contribute to get at least 10%. So this is one of the misleading things that I was telling you. Like this is 38%, but this, if here it says 5 ETH, and I have set this as 10, it means that if I put here 5 ETH, this pretty much disappears. Let's use a search to try to get it back. You see now it's back to 11. And it's not that I'm putting that much money, right? And I moved the
Right.
market from like 40 to 10. So this is why we spend a lot of time and tears, because it was extremely hard to do this. But we believe that people should have the tools to make decisions as most informed as possible, if that makes sense. Like
Sure.
you need to have the data, and like sometimes having the data is complicated as well, because all of this is a lot of equations underneath. So we just go and try to simplify it to the extent of the possibilities.
Yeah,
So it's just
definitely can
like
be difficult to
here.
calculate some of this stuff.
Yeah.
Yeah,
Some other info we give is like, so if you're trading points, we actually tell you more or less how many points you will be accruing. We don't value these points because it's kind of tricky, but you know, like nobody else does this math. You don't know how many points you would be getting in any other trade. And then we
yeah,
also tell you in dollar terms, you know, if you don't give us a value, at least we give you a reference of if you spend $1,000 here, you're still going to be making money, and you're going to be accruing these points on a daily basis. Again, all these instruments, as I say, so this Ethena thingy here, that here what you look at is I'm looking at how many points I'm getting and how much it's costing me. It's going to be the same Ethena thingy that is going to show up here if the pairs are correct. So what is SUSD in my filter? Oh yeah, it's probably not giving that much return. So let's try with 5%. Yes, now I have some. So this 77% that we saw before, right, is the same instrument. So if I create a position, I'm going to see it here, I'm going to see it in the point screen, and I'm going to see it in the trade screen. Same as this one. Here I'm arbing the rates between USDC and USDT. Well, now I'm actually losing money, but again, this is a small test position. But this position here is the same position that I have here. So it's all integrated, and it's just different ways of observing the same data, depending on what are you most familiar with and what is that you are after, like points, are you after rates, are you after like a full trading experience? Your choice, effectively.
very cool. Yeah, and then I'm curious as well because yeah, you mentioned building for a while as well, and I've seen a lot of your metrics growing pretty rapidly, like recently, but also just over time as well. So what do you attribute that product market fit to? Is it something like what have you maybe like tweaked about the platform to make uh yeah, it potentially more interesting to people, or just curious yeah, where that growth kind of came from?
So something we kind of coined recently is that narratives come and go, but looping always stays, or
It's
looping
true.
stays actually. And this has been true for us, because like when we launched, and it was also like sort of like the bear market and stuff, W stake ETH was king. You can see that is in volume terms, this is still 30% of our total volume ever,
Right.
and it's still 40% of the open interest. But then the narrative of Ethena and the points narrative came along, and then Ethena came along and Maker, and suddenly we listed those assets from the day zero, pretty much, and people slowly started trading on them, although they were cautious because we started asking questions because when product launch in Morpho, like a lot of loops happen manually, and we were like, why people are doing this? Like when you do manual loops, it's not only expensive and cumbersome, but you have no tracking, you have no idea what's going on. You don't know if you're losing money, making money, liquidation risk, blah.
Yeah.
So a couple of answers we got were like, yeah, no, like people have been burned in the past and they didn't get their airdrops because the position was in some sort of like smart wallet or whatnot.
See.
So we got in touch with Ethena and with EtherFi and all these guys, and we made sure that we were properly integrated and they would consider our positions, and then they actually did the airdrop for Ethena pretty quickly. We got it and distributed to our users in no time. And since then, like people saw, okay, these guys more. It seems that they know what they are doing, I guess. And suddenly the open interest and the volume on that spiked. Then EtherFi came along with the points and the airdrop, and then we got a special deal with them. So now we have 3x multiplier on their points instead of 2 like you would get in the vanilla money market.
Right.
Suddenly WEs exploded. Then another thing that happened was that Silo decided to experiment with the PTs coming from Pendle, and we were fairly quick to list that, even if it was not. It had its own shenanigans because it's not a traditional swap, and it has a few differences with any other token. But I think in less than a week, we managed to be live with that. And suddenly, again, the open interest exploded on that because at the time you could get like 60% ROE on at least on fixed lending. And then Renzo came along, and then Aris East from Kelp came along all on PT form. And then that's when we launched our point screens for people that were actually farming the points and not the PT. And all of these narratives, they were sometimes running in parallel. Sometimes one of like was the biggest, but all in all, what we realized is that if you provide the tools to people to trade and to to make their life easier, they would come and trade on you.
Right.
And so yeah, that's we also have some incentives now, which is also helping with the latest metrics, but we started like going parabolic in the metrics way earlier than the incentives started. Like the incentives maybe started like here, something like that. So yeah, all of this growth is definitely just organic people coming and saying, hey, I want to trade here because the product is cool and whatever you give me is useful, effectively.
That's awesome. Yeah. So it sounds like a lot of that, you set up that foundation for growth with V2, focusing on, yeah, I guess looping via money markets instead of the V1 product. Got some, initial strong traction with the WST ETH rate trade, and then with all these new LRT protocols coming about and points trading coming about, a lot of people were interested in looping in the money market, and it looks like, yeah, even though maybe the volumes on that have decreased a little bit, people are still here doing some of these trades. Yeah, but it seems like, I guess, some of the interesting trades though between non-correlated assets, maybe people aren't executing as much, like the ETH trade, because I thought that one was pretty interesting, like especially with like 2 or 3x leverage, you're getting paid to go long, and you have like a reasonable liquidation price. So it seems like if you're, trying to go long on a longer time horizon, it seems like a very good strategy versus, yeah, regular perps, because the funding can go so high. So I guess if you're, yeah, more long term oriented, it's great for the non correlated pairs as well.
Yeah, And I think like yeah, as you said, like some of the bases were like the lessons learned from V1. So V2 is extremely modular. We went from like the POC was Aave V3,
Right.
and we went from Aave V3 to this list of like 12 or 14 money markets in a matter of like months. And adding a new money market nowadays is not that much work for us. It's mostly audits and shenanigans rather than doing the contract and the things that normally take a long in blockchain. Likewise, adding chains is relatively easy, assuming that the infrastructure is there for us to run, because
Hmm.
we actually delegate as much as we can to third parties. So we delegate security and liquidity to money markets. We delegate swaps to swap aggregators. So we work with about 20 swap aggregators. And every time you are about to trade, what's going to happen is that, I don't know, if I were to trade $50 here on this market, as soon as I do review trade, what this spinner is doing under the hood is like quoting in as many money markets that are available in that chain, and then simulating the trade. Okay, and we do a lot of hacks, so I don't even need to ask you the approval or the permit. So I can still simulate the trade, and this is something really cool that my co-founder did. And when I show you that green tick of 3,160, sorry, yeah, 3,160. What that means is like we actually got the transaction, simulated it through our smart contract, and the execution says this, you got this much. I'm not even trusting the quote I get from the API of, in this case, Oros. It's the essence of blockchain. Trust but verify. So here I'm verifying that this is gonna be the price you get. And that's something really cool as well, in my opinion, because it's like there is no surprises there, unless of course you are on mainnet and you forgot to use your MEV protection. Then you'll see some nasty surprises, but that's not unique to us, right? That happens.
Yeah.
So yeah, go ahead.
Yeah. Man. Oh yeah. Like what's on the roadmap for Contango? Like, are there any interesting things that people should be staying tuned for, or like yeah, upcoming things to be aware of?
Yes. So we have a long backlog of things, and things come in different categories. So we have a lot of nice and fancy assets that will come into the platform. So you can lever more exotic things that we think nobody else offers. Of course, we also have to do all the communication about that, because every time you present something new, people need to understand what are you talking about effectively. Like we when you guys list in Dolomite, we could be listing your LP tokens, so people can actually lever on that and have a levered exposure to you. We already have something slightly similar here with the RE7 metamorpho thingies. So here, what you are doing is effectively levering on the LP token of Morpho for USDT, and then you are borrowing USDA to go long on that and lever up. And again, liquidity is shallow, but in theory, you could be getting 60% ROE. Probably I can move the market just with my 200 USDA that I have for my in my test balance. But still, it's a decent thing. This is something like every now and then we get in touch with the curators and try to get some more liquidity, so rates are more stable. But it's an example of like the composability that DeFi allows.
Yeah.
On another hand, we plan to add more tools around simplifying your interaction with DeFi. So if you need to swap something, if you need to follow your portfolio, if you need to see your values in dollars, if you need to see, I don't know, if you want to see information about the history of the rates and how they affect or how they behave in the past, or charts about how the interest rate would behave given some sizes and stuff. It's a lot of, like, in the end, what we sell is UX, right? I always say our UX is not perfect, and it's never going to be, because perfect doesn't exist, but we try to do the best we can with the resources we have. We are a very small team. And yeah, and then we have in line a lot of like really interesting assets that I don't wanna, I can't spoil right now, because it's like it's deals that we are still working around, but we are already working in the next narratives, and also of course in solidifying the existing ones.
Yeah, it's very cool. Yeah, I remember my previous question now. So, because a lot of this is like delegated, where does Contango make the revenue? Are you taking like a cut of the APYs or uh, fees for opening the transaction? How does that work?
At the moment, we are not making any money.
Okay.
The policy was like, let's see what people want, and then let's figure a way to monetize that in a way that is, a win-win for both parties.
Yeah.
Like, people in crypto are always expecting to pay something, and I think that's really cool. It's something that really set us apart from Web2. And yeah, it's nice that this question arises all over the place. Like, how do you guys make money? So yeah, that's something we will start looking into relatively soon, I believe. But again, it's something that I don't want to. We just don't want to just put, like, let's say, let's put the fee here, and like, it doesn't matter, because every product is completely different, every use case is completely different, and we want to be mindful of what's the utility, and what can be something that people are willing to pay for without, the users feeling that they are getting screwed, and us feeling that we are not getting value in return for the tools we provide. So it's not a decision that we will take lightly by any means. We'll try to study it and find the best compromise. I mean, we would love to have this for free, but in the end, at some point, like, you need to make money, or
Right.
you'll go down the drain, right? So yeah, that's something that will come eventually. We don't have a timeline for that.
Okay. Yeah. Sounds reasonable and sounds like a really, community driven, healthy approach, which is, yeah, nice and refreshing to hear. And then, yeah, for those who might have missed it, what Ultra Secret was kind of alluding to earlier was we're working on an integration with Dolomite right now to allow the listing of some of our LP tokens, like ETH USDC or WE ETH USDC being the more popular ones. And then with something like Contango, what you could do is essentially loop that through Dolomite. So provide the ETH USDC LP, borrow USDC or ETH against it, and then loop it. And so if you're borrowing USDC, I think, yeah, you would essentially be paid to long ETH, similar to some of these other trades. And then if you're borrowing the ETH, you have, closer to delta neutral exposure while earning a yield from that. So yeah, pretty interesting styles of trading. And I think as he was showing, the APYs could be pretty high there, since you're essentially leverage farming with a price direction exposure, whether that's, yeah, wanting something that's not as exposed to ETH or long ETH. So I think there's going to be some interesting things there, and we can get more LP assets as well. There could be even more interesting strategies with different types of assets. I think Dolomite is really cool because they have a really strong engine that can list a lot of these exotic assets that other money markets can't in a safe way. And then Gamma Swap is interesting as well because we're allowing leverage on any asset without an oracle. So there could even be, new markets here that, yeah, wouldn't be available before, like not just ETH and USDC, for example, like maybe some meme coin or some altcoin, for example. So we're really excited about that integration. And I think that's it for the call because we went through the demo today. We went through, uh, yeah, like the background on Contango, some of the popular strategies, how to use the platform, and then yeah, potential areas of collaboration. So yeah, if there's anything else you want to add, ultra secret, you could, yeah, you can do that now. Otherwise,
Yeah, so
we end it.
with the always repetitive sentence of this is not financial advice, something that we have at the time is that we are running three incentive campaigns in parallel from three different networks. So on any instrument that you trade on Arbitrum for the next 6 to 8 weeks, I can't remember when the grant ends, you would be getting an extra APY in the form of ARB, of course, for any Arbitrum pair. Optimism is the same. We are getting OP rewards from the Optimism Foundation. And then for, yeah, so for something like, what do we have? Like stake is in base. We saw it before. This is also, you are also getting OP, but it's part of the Superfest campaign. So any, in the Superfest campaign is like any pair where you are long in an LST or an LRT, like in this case, you would be getting incentives as well. So yeah, you are effectively getting an extremely good deal to long on a wide variety of assets. And we try to adjust for like leverage and risk. So here you can say that like you get about 2% on a correlated pair like stake is, but if we were like in directional trading, you would get up to 10. That's because we acknowledge that you have lower leverage and higher risk, keeping a position open here. So you are rewarded, I want to say accordingly, but we just made up a number and it's like 5 times more. So yeah, anyone that is trying and looking for play with DeFi apps or is looking for a venue that allows for this kind of looping exposure, you can trade it, you can test it now and pretty much get paid one way or another for doing so. So
Yeah. So if
again,
you're, I guess if you're looking for lower leverage and something like ETH, instead of paying, right, like a 10% funding rate, you could earn
yeah,
10% here, instead of having to pay for that, which is awesome.
correct. And on top of that, we are still running our points campaign. This is my test wallet, so I don't have that many points in on a per week basis. But the points campaign is still alive, and we already, if you search on Twitter or on our Discord, there are the details how these points will become something when we do TG. And I would encourage you to read the documentation of the points, because like here, just keeping the position open gives you this APR. Points have an extra twist, mainly to prevent wash trading and stuff. So make sure you understand how the points work before you try to farm them. that's
Definitely.
that's my advice, my friendly advice. Again,
That's always important.
do your own research. This is not financial advice. I'm not encouraging you to take any risk in any way. Do your thing.
Awesome. Well, yeah, it was great having you on Ultra Secret. Really enjoyed walking through Contango. I learned some things as well. So hopefully people who are listening in or will listen in the future, because we'll also be adding this to YouTube, learn some things as well. So Yeah, thank you for the time. Excited to see what else Contango comes up with in the future.
Cool. Thank you very much for having me.